Hi there, welcome to kneppyinvests and welcome to July the 5th, 2024. Always have to look at my watch to get the date right. We have just under 1 hour of trading today and this week. Fairly quiet day on the ASX. The American markets were closed because of Independence Day, and you can sort of see that in the indices. Not much happening there. Some are down, some are up. Small caps is up slightly. Mining is down, so a pretty good day yesterday, down today, which is understandable. And in terms of announcements, really quiet. Probably one of the quietest days I have seen. In fact, only 45 events or market-sensitive announcements released today compared to 293 on Monday, 136 Tuesday, 96 Wednesday, 99 Thursday. Even if you go back last week, about 200 events were released on the last trading day of last week. So it is quiet right now. And typically when we are in a quiet period or quiet day, the floodgates are about to open. And we're going to see that during the last few weeks of July. I'm hoping that the first Appendix 4Cs and 5Bs will be released next week. I expect a few, but not many. And then we'll see more and more being released of those particular quarterly reports being released in the last few weeks, particularly the last 2 days of July. We'll also see some financial results being released towards the end of the month. I expect a company called Corvest to release the first financial year 24 results. That should be within the last week, maybe even the last 10 days of July. And then Credit Corp tends to release their financial results either the last day of July or maybe the first few days of August. And then we go into my favorite time of the year, August reporting month. And I will be busy next week. Now, not many announcements to choose from today in terms of my top 5 announcements or stocks of the day, but I have come up with a top 5 stocks of the day featuring 2 companies I own, and both of these companies released interesting announcements. One of these companies, share price is up, last time I looked, about 15%, and a possible breakout. The other company is a small gold producing company, and they have released an update. Another 2 companies I'll be talking about today, I just chose because of comments. The last 2 comments that were released on my channel from MAP. So 2 lucky posters are MAP 0v0, what is happening to PPK. And then I'll also talk about Jumboot Interactive because Ruben KHJ asked me why that company has dropped in share price today. No idea. So I'm going to have a look at those 2 companies. And then, well, maybe not then, but the 5th company I want to talk about today is a follow-up from a company I was talking about a few days ago, Booktopia. They've gone into voluntary administration, and my discussion on Booktopia is going to be highly influenced by a Sydney Morning Herald article I read last night, and I'll talk about why later in the video. And then before we do all that, definitely I'll go into the market today, ASX Today, looking at the best and worst performing sectors, indices, and companies. And then we'll have a look at a few charts. I've got 5 companies to have a look at towards the end of the video. And then I might have, if I've got time, I might actually delve into a few other questions or replies you have for me. Okay, so let's have a look at the ASX today. So fairly quiet day on the markets. However, a few sectors and indices are up. So healthcare's had a good day, up 0.65. So hopefully that's CSL. I actually am a CSL owner, and I'm also trading CSL now, and that is one of the company's charts I will show you. Telecommunications up, maybe Telstra's had a good day. Staples, maybe some of the like Woolworths, Wesfarmers have had a good day. Utilities, Transurban, a few others there. IT's had an okay day today, but mining's had a bad day, down 0.59%, and financials, bad day as well, down 0.51%. In terms of the ASX 20, based off the sectors, I'm going to say CSL has been the best performer because that is one of the biggest companies on the ASX and it's a healthcare company. Well, I'm going to say the banks and BHP all down, maybe some of the other iron ore companies down as well. Energy is down slightly, so Santos and Woodside's had a few good days. I'm going to show you Santos charts too. So let's have a look at the best performing and worst performing ASX 20. So I'm going to say 8 companies up, 12 down. 8 up, 12 down. So close again. And I'm going to say CSL at best. No. At number 3, Telstra is at number 2. Again, telecommunications. Aristocrat has had the best day. And there's Woolworths and Transurban as well. And we have a bank there, ANZ. There you go. And the worst performing companies, NAB, Rio Tinto, Fortescue, BHP, Commonwealth Bank of Australia, Westpac. Not sure why ANZ is up and the other banks are down big. That's really weird. Santos is there as well. And Wesfarmers as well. What is Wesfarmers staple or is that something else? Consumer cyclical. What is consumer cyclical? I didn't know there was a sector called consumer cyclical. I doubt there's a... Anyway, okay, so let's go to the best performing companies and best performing companies by percentage change and market cap. So we have equity story, going to bypass that, low turnover. Titomic, I'm going to have a look at the chart for this company. I am sort of hitting myself because I was looking at buying this company at about 7 cents as a trade, and the share price has almost doubled. So we'll have a look at that chart. I'm not going to talk about AML 3D. It's just a pump from Next Investors, up another 26.47%. Infinity Resources, I discussed this company a few days ago. Seems like that company's share price is still on a bit of a tear. So we might have a look at that chart as well. Otherwise, nothing else of interest there. So let's have a look by market cap. Vulcan Energies had another good day. Clinuvel, and there it is. Top stock of the day. Clinuvel up 14.9%. As a long-term shareholder of that company, I am happy. Race Oncology has been popping up on my lists, my radar, and there's Biome again, up pretty good. So Biome shareholders are really happy right now with the share price performance of that particular company. Okay, so let's have a look at the worst performing companies today. See if there's any surprises here. I don't think there would be big surprises. In fact, as I go down this list, I'm seeing nothing of note. No big turnover. And when I say no big turnover, the highest turnover is $62,000 from Evolution Energy, a company I've never heard of, with a market cap of $9 million. Just look at the market cap. Serco, which is illiquidly traded, is down 8.44%, but it's on low turnover. Even though the market cap is $359 million, it is a New Zealand-based company, so I think it is more actively traded on the New Zealand Stock Exchange. Other than that, nothing of interest. VanEck, Bitcoin ETF. VBTC. How long has that ETF been going? I have no idea. I wonder if Bitcoin's had a bit of a bad day. Let's have a look. Oh, yes, Bitcoin has plunged recently. Oh, Bitcoin's chart looks pretty negative. This is the definition of a negative looking chart. Bitcoin down 4.8% today. In fact, 3 big down days in a row, and Ethereum's probably looking pretty bad as well. No wonder that particular ETF is down 8%. Okay, so let's have a look by market cap. Boss Energy, Clarity Pharmaceuticals, so a few highly volatile companies. Botanics has been popping up. There's Southern Cross Gold, up one day, down the next. Serco, Calix, EROAD, understandable. I've been mentioning EROAD. There's Crypto Innovators ETF. Should I have a look at EROAD? I've been looking at EROAD when the share price is up, so why not have a look at EROAD's chart when the share price is down? And that's all she wrote. That's all she wrote for the top losers and top gainers of the day. Okay, so let's go into the top 5 stocks of the day. And which company will I start off with? That's the big one. Which company shall I start off with? We'll start off with Jin, or Jumbo Interactive. So Ruben says, hi Kneppy, do you know why Jumbo Interactive had a drop in share price today? Now, more than likely, the company did not release anything. I did not see any announcements from this company. And share price is only down 2.3%. Nothing released today. In fact, the last price-sensitive announcement this company released was on the 8th of May, so that's 2 months ago. And that was just a presentation. Okay, so let's have a look at the chart for this company. This could be just noise. So the low of the day was 1635. Yeah, I think this is just noise. It could be it's just someone dumping on their shares on the market. So what I'm going to do is have a look at the chart for Jumbo. And I'm going to say right now it's noise. So have a look at the chart for Jumbo. And you can just see yeah, it's just noise. This is just noise. We've seen other days like this before, where the share price has been volatile, intraday volatility, that sort of thing. And what I like to do is just have a look at the 5-minute chart. And I'd say there was just a little bit of volatility at one point in the day. Yeah, near the start of the day, there was a bit of selling, not a lot. And the reason I say not a lot of selling, there was no high volume, very little volume during this sell period. And in fact, in the last 5 minutes, is the highest volume we've seen. So between 255 and 3, massive volume coming in, didn't really cause the share price to go higher. But yeah, so this is just noise. Nothing happened. It could be just someone selling on market, someone dumping their shares. We could trigger stop losses. That's the other thing. It could trigger stop losses. Let's have a look at the chart to see if it might. Not really. And the share price is just going sideways right now. The longer term, there is a longer term uptrend, but the share price is going sideways. When the share price gets above about $17.60, where it was not that long ago, we do see a little bit of weakness in the share price. And now the share price is moving towards support level. In fact, if the share price moved towards $16, that could be a buy. So this is just noise. It's just noise. Nothing's happened with the company. And as an investor, particularly if you do invest in companies that can be volatile, you have to get used to noise. Even if you're trading, you have to get used to noise and possibly even take advantage of that noise. So Jumbo Interactive, nothing wrong with the company at all. Now, there could be, maybe there was some news this other day that I completely missed, but even if there was news, it only had a very short effect on, there was stocks down under. Could Jumbo Interactive deliver growth living up to its name? I have no idea. But I see no news here that would even, no, that's new. There's no news. Okay, so that's Jumbo Interactive. Coming in at number 5 on stocks of the day. Thank you, Ruben. And then we'll have a look at what is happening with PPK. No idea. Is this another case of a bit of noise? Up 1.45%. Oh, interesting trading. A lot of volatility today. Share price opened at 70.5 cents, went to a high of 85 cents. So that's a nice, what's that? That's a 20% rise in share price, intraday rise, and back down to 70 cents. So hopefully you did not buy shares at 85 cents. So let's have a look at the announcements. No announcements. They did a capital raising, looks like, or something. Proposed issue of securities. Could be just options or something. Decision on relief in court proceedings. So let's have a look at the chart for PPK. I had a look at this company once, and I don't remember what they do. Okay. So you're talking about the longer term. Share price has risen a fair bit. In fact, the share price has doubled, more than doubled in like a month. So this is a little bit of volatility. But the share price is still in a downtrend. I'm still calling it. Share price still in a downtrend. And we have seen some selling come in today. I've already mentioned that. Share price got as high as 85 cents, now down to 70. That's not what you want to see. It's in an important area. If we don't see a lot of selling coming in, and you can see a lot of selling came in when the company released something on the 3rd of May. And the 3rd of May, if we go back a bit, 3rd of May, they released CIB announces $30 million offer. Well, that rings a bell. This is like an investment company or something. Defense this rings a bell. Body armor. Yeah, this definitely rings a bell. So I think this company is sort of like an investment company. I could be completely wrong, but that triggers, and I wish, put an about section. That's just recent announcement. Put an about section. Jeez, it's not that hard. All the way to there. Is it really hard to put an about section? Oh, most companies do it. Yeah, so some sort of investment company. I'm not sure how to describe this company. They invest in other companies. I'm pretty sure that's what they do. And here's some of the companies they invest in. Where's that? CIB, Craig International Ballistics Defense and Law Enforcement, CIB. They also have LIS Energy. I'm pretty sure that's ASX listed, yes. So this is like an investment company. Anyway, so what's happening to the share price? No idea. This could be just a little bit of who knows? I had no idea. No idea. There's been no announcements on the company. PPK, news flow from PP Group. And yeah, no news flow, whatever. So no news flow outside of the announcements. And yeah, that's it. This could be just I wouldn't say it's absolutely noise. Now, one thing I do like to look at is volume. I notice a very low volume as your share price is dropping, low volume, a lot of volume coming in on that 3rd of May. Then the share price dropped because there's a lot of resistance. The share price has been significantly higher in the past. When I say significantly higher, if you go all the way back, the share price of this particular company was as high as $22 back in 2021. Now it's 69 cents. So there's a lot of shareholders who are significantly underwater who just want to sell out. And whenever they see the share price rally, it gives them a bit of an impetus to sell out. So we saw another really good rally back here, back in May, June of 2023. So there would have been some people who got caught out by this rally thinking, oh, the share price is turning around. And no, there was some good volume there as well. But then that volume just completely dried up and the share price continued to drop. Now, and continue to drop and drop and drop. Now, we have seen a bit of volume after the 3rd of May. That is one thing. And you'll probably be able to see that when we look at the weekly chart. Yeah, you can see the volume has increased. And we've seen continual higher volume than what we've seen over the past 2 years. But the volume hasn't quite got as high as we saw back in 2021 when the share price got to that 22 high. I'm not sure why people were buying this company back then. So I probably wouldn't say this is a breakout just yet for PPK. And this one-day candlestick is a worrying one. And I wouldn't be surprised to have seen some day traders in this the last few days playing it. And they could be getting out today. Yeah. Anyway, PPK, that's all I can really comment when it comes to that particular company. Okay, so let's have a look at Booktopia. And why I want to discuss Booktopia. So it goes back to this particular article from the Sydney Morning Herald that I did read. I think they released it yesterday. Yeah, July 4, 2024, 3:29 p.m. So I read this particular article last night. Opinion from Elizabeth Knight, business columnist. Series of unfortunate events. Demise of Booktopia is a page turner. It's an interesting read. But my favourite part, well, maybe not favourite part, but the part of this particular article that did influence me to talk a little bit more about Booktopia is right at the end. When Booktopia reported its most recent financial statement for the first half of 2024, its struggles were a flapping red flag. Revenue had fallen off a cliff and its profits was as red as the flag. And its profits were as red as a flag? Should have been, were, or was. I don't know. I'm not a journalist. Okay, so let's have a look at Booktopia and their financial statements that they released in February, just to see if we can find these red flags. What are the red flags we should be looking for? So let's do it right now. Why not? I could do this as a standalone video, but let's do it in this particular video because there's nothing else to talk about. Now, we also could look at the Appendix 4C they released in April. So why not have a look at that as well? We'll open that as well. You have to go back to... there we go. So let's have a look at the half-year accounts and see if we can find the red flags in this. And then we'll have a look at the Appendix 4C. And I don't really care about this summary here, so I'm going to go all the way down to their results. We'll go through all three financial statements, starting with the profit and loss statement. So the first thing is revenue is down. Now here's the history, by the way. This is revenue history. Yearly revenue history plus the last 12 months, and there is a bit of a sign of revenue starting to drop. The other thing I've included here is gross margins. Gross margins have been dropping over the past 6 years. That's not a good sign. I've also included free cash flow and highly free cash flow negative the last year after being positive the previous year. Anyway, so let's go back to the financial statement. So revenue, pretty big drop in revenue. I think they did mention that. Didn't they mention that in the article? Yeah, revenue had fallen off a cliff. Yeah, I could see that. Yeah, big drop in revenue. That is in itself a red flag, but it's not necessarily a significant big red flag right now. I have seen other companies see their revenue drop big, but usually those are cyclical companies. I don't know if you could call Booktopia cyclical. You could, because this company listed because of COVID-19 and they thought business was going to remain booming forever. And they were obviously wrong, just like Kogan. And I would say that without knowing as much, Booktopia probably increased their inventory a little bit too much and they suffered because of that. There's probably other reasons behind that as well. Too ambitious when it comes to growth and that sort of thing. Now, so let's go down the list. So what I'm looking for when it comes to the profit and loss statement, and I'm looking for any one-offs, and I'm also looking at the profit or loss because it's a profit and loss statement. So revenue is dropping. That's a bad sign. But just because revenue dropping is not necessarily, albeit the red flag that would turn me off a company. It does turn me off, but not the thing to turn me off. I have to look at other things. Now, a loss of 15, this is not including tax. So we'll say including tax, a loss of $16 million. That in itself is not a red flag either, because there could be some significant one-offs. Maybe there's a $30 million one-off and the company would have been profitable by 14 million. So the underlying profit would be 14 million. So is there any one-offs here? There's a slight impairment expense of 2.5 million, but otherwise everything's looking okay, which means this is a legitimate loss. And you can just see that by, so revenue of 86 million, product and freight costs 66 million, employee benefits expense 15.6 million. So those two expenses are 81.7 million. So $4.5 million of runway after that. So then you got amortization and depreciation expenses, advertising and marketing expenses, finance costs, IT communication expenses, occupancy expenses, merchant fees, and other expenses, all greater than $1 million, adding up to a loss of 15 million. So red flag revenue dropping, red flag loss, and there's no one-off. So even underlying loss is pretty big. So some pretty big red flags just looking at the profit and loss statement. That particular journalist, what was her name? Elizabeth Knight. Elizabeth Knight is not wrong. Okay, so let's go down a little bit further. Let's have a look at the balance sheet. See if there's anything that would cause me to run for the hills if I was looking at this company back in February. Okay, not a lot of cash, $1.5 million on cash. Trade other receivables has actually dropped. Inventories dropped, but at $13 million. Total current assets at $18.5 million. Total non-current assets at $62.7 million. And total assets of $81.2 million. Trade other payables, $32.8 million. That's a lot. That's a lot of trade other payables. Contract liabilities, $12 million. It's not looking good. Lease liabilities, 3.8. Borrowings, this is just in current liabilities, 6.8 million. That was down from the previous year. Provisions, 2 million. Total current liabilities, 58 million. Total current assets, 18 million. That is a red flag. That's a pretty big red flag. But the same thing happened last year. Total current assets were significantly higher than total current liability. So this is what's called, I think it's called quick ratio. I am not an accountant. So that's the thing you should understand. I am not an accountant. I have an economics degree and I did a little bit of accounting in that degree, but I would not call myself an accountant. So sometimes I just don't remember what some of the terms are, but I'm pretty sure quick ratio is current assets divided by current liabilities or something like that. And you do want to see, preferably, current assets to be greater than current liabilities. Now, I have heard that if a company has a lot of turnover, sometimes assets or total current assets being greater than total current liabilities is okay. But in this case, there's a massive difference between the two. And non-current liabilities, lease liabilities, 37. Why do they have a lot of lease liabilities? Don't understand that. And borrowing, still $3.5 million there. So $10 million of borrowings. And total liability is 102 million. And another pretty big red flag for me is net assets is negative $20.8 million. This company has has a negative net assets, which means the equity is negative. You don't usually see this among better quality companies. So straight away, this is a low quality company, and I would see net assets being negative by $20 million has been a fairly big red flag, and it's gotten worse from last year. So yeah, net assets, equity, negative, big red flag. Very fact that, was it trade and other payables, 32.8 million seems a lot. They do have a fair bit of debt, it seems like. And when I say debt, I don't mean borrowings. I mean trade and other payables is sort of like a debt. It's sort of like a working capital, but it is something they have to pay off fairly quickly. And can they? I don't know, based off this. Okay, so let's have a look at the cash flow statement. Is this company generating cash flow? Well, and the answer to that is no. Operating cash flow positive 2.9 million. They were negative last year, $2.9 million, and free cash flow negative because property, plant, and equipment is 5.7 million. So not free cash flow positive. Now this is just one half. So maybe the second half is better. I don't know. And they did net proceeds from the issue of shares. So they did a capital raising and not a lot of cash on hand. We already knew that. So there are significant red flags. Now, another thing I like to see is going concern. So let's see if we can find that. Here it is, going concern. And we'll have a look at the going concern from the auditors, which we found near the end of the half-year report. So what do they say here? So they're talking about, I have a feeling a lot of the stuff I was talking about. So they say here, for the loss, it had an excess of current liabilities over current assets of 39.4 million. The business had negative net assets of 20.8 million. It did, however, generate, so that's a negative. It did, however, generate positive cash flows from operations of 2.9 million during the period, but then in brackets, negative operating cash flows of $3 million in December 22. Did not mention free cash flow. The group has two material debt financing facilities and has undertaken a $10.9 million equity raising, which was approved by shareholders on the 16th of August. And it goes through the debts. Okay. They also have an equipment finance facility with Money Tech. $7 million Money Tech trade finance facility has been extended to the 31st of August 2025. Okay, so here we go. Based on the assumptions in the cash flow statement, and we all know all the cash flow forecast, and I didn't see cash flow forecast, but I don't know what that is. And we all know that assumptions can make an ass out of you and me. It's in the name. So I always look at assumptions with a grain of salt. Anyway, with the current financing facilities terms in place, the group expects to have sufficient cash flows and liquidity for at least 12 months from the date of signing. We already know that's wrong. That's an incorrect statement. Well, no, maybe not wrong or incorrect, but it has not come to fruition because the company has gone into voluntary administration. So within about 4 months from this particular report. Accordingly, the directors have concluded it appropriate to prepare the financial report on a going concern basis. And then we go into some of the risks. There remains risk to the group's ability to continue as a going concern if it is unable to achieve its operating cash flow forecast. That could be what's happened, and or breaches its debt covenants, leading to Money Tech calling the facility. If these matters were to occur and the group were unable or not able to adequately mitigate them through other measures, a material uncertainty would exist, casting significant doubt on the group's ability to continue as a going concern. Yeah, if I was reading this report and I was reading this, I'd be running for the hills if I was a shareholder of this company. But there was no reason I would be a shareholder of this company. So the other thing, and they go continue a little bit more here, saying what would happen if that happens. And let's go to the auditors. Found Aroa at the bottom. So the auditors are RSM. Don't know who RSM are. So they should have a going concern part here. Here it is. Here it is. Material uncertainty related to going concern. So we draw attention to note 2 in the financial report, which indicates the group incurred a net loss of 16.7 million during the half year. And as of the date, the group's current liabilities exceed its total assets by $39 million. So that's that quick ratio. Let's Google it. Pretty sure it's quick ratio. Or is it current ratio? Quick ratio formula. Dividing company's most liquid assets like cash equivalents, market, by its total current liabilities. So that looks like, total current assets divided by total current liabilities. And what is a good quick ratio? Anything above 1. So yes, and this company is not above 1. It's like 0.3 or something. 0.3, 0.5. Yeah, about 0.5. Anyway, let's go back. What was I talking about then? Yeah. So total assets by 39.4 million and had net liabilities. Again, that's the that's the net equity or net liabilities or net assets of 20.8 million. So equity is equal to net assets or liabilities. As stated in Note 2, these events of conditions, along with other matters as set forth in Note 2, indicate that a material uncertainty exists that may cast significant doubt on the group's ability to continue as a going concern. Our opinion is not modified in respect of this matter. Okay, so just I think it is important to look at the going concern parts of the financial statements. You can get a lot of interesting information in those. So a lot of red flags when we look at Booktopia's financial statements, just not that revenue has dropped. So my only slight, I wouldn't say it's a red flag among this particular statement, is they just mention falling revenue and its profit was as or I wouldn't say revenue had fallen off a cliff and its profit was as red as the flag. Well, it's a nice end to the article, but even if you go dig a little bit deeper into the financial statements, it was an ugly half-year report from the company, and no wonder the company has hit the wall or has gone into administration. Okay, so that's company coming in top 3 stocks. No, coming in number 3, and the stocks of the day is Booktopia. Bit of a deeper dive into the company's woes. Okay, coming in number 2, we have a company called Auric Mining. So up 15% today. So Auric banked $3 million cash this quarter, 150 kilotons to be milled 24th of July 24. I'm just trading this at the moment, so I'm not know this company intimately. And one of the reasons I have a little bit more, let's say faith, what's a word, conviction in this company is because they are producing. It seems like their production is stop-start at times, but the market cap of this company is only 33.4 million. I thought that's pretty low. And then I had a look at the chart of this company. I went, there is a bit of positive sentiment around this company. And there's me buying at 17 cents. So I'm up at 23 cents, about 33% so far. The breakout for this company was in December at a share price of 7 cents. You'll be a 3-bagger if you're following this company back then. You can see the really good increase in volume as well. Always have a look at volume. Volume tells you a lot. And definitely a shift in sentiment. This is a beautiful shift in sentiment. So someone did ask me, by the way, just somewhere down here, what is the best indicator for positive or negative sentiment? Well, to me, it's just, you can just see volume. It's a combination of volume and shift in the trend of the share price. So if you combine the two, you can definitely see a shift in sentiment just by looking at this particular chart in November, December. Increase in volume, increase in share price, and the trend in the share price had shifted. So that's just a shift in sentiment right then. And yeah, just if you know how to look at a chart, there's positive sentiment in this company right now. And not only that, share price today has got to 23 cents. The last time the share price of this company was 23 cents was, let's have a look at the weekly chart, was way back when they listed, back in March 2022. So this is the sort of chart I am always looking for. Now, preferably it's not a mining company's chart. I do prefer other charts, but so this is fairly similar to this chart, not the company. The chart is fairly similar to, let's have a look at Shape Australia. Just after they listed, look, almost the same time listing. Look at that turnaround. Doug, listed a little bit longer. Doug. And you can just see that. If you just go back here to this point, yeah, it's a fairly similar chart. So this is one of the reasons I do like to wait for a while after a company lists, because a lot of times you'll see a share price of a company drop significantly after it lists. I wonder if GYG is doing that. Let's have a look at Guzmán y Gómez. No, it's still lower than $30. Anyway, so that's one of the reasons I decided to take a position in Auric, is just because of the chart. And the other thing was they were talking about production. And I don't know this company all that well. And I was just thinking, when I bought. I think this company could be cheap at the market cap. And this sort of confirms it. If they can generate some cash flow, first cash of $2 million to be received in the third quarter, 2020 from gold sales. Now, when I had a look at the most recent Appendix 5B, no cash receipts. So as I mentioned, seems like at times the cash flow in this company can be quite low. Processing to commence 24th of July with campaign to last 6 or 7 weeks. Yeah, so again, stop-start production. So I don't really understand this company all too well, but it looks like they will be generating some cash flow and a repayment of $1 million working capital. Do they receive that? So let's have a look at the most recent Appendix 5B. And you'll notice that there's no cash flow. And the reason I still look at this particular cash flow report, even though there's no receipts, is because I just want to know how much cash they have. So at the end of this particular quarter, they had about $2 million of cash. And another thing you might want to look at is any debts, so no debts. Another thing you might want to look at, which I haven't had a look at, is just the activities report. What are they talking about? But for me, this is just a trade. Just a trade of the chart. And at this point in time, no reason to sell right now. For me, So let's have a look. That's number 2, Auric Mining. So the company of the day is Clinuvel. Share price up 14%, which is now lower than Auric, $17.30. So there's been a little bit of selling. Share price has reached a high of $17.70. I do like this announcement, by the way, from the company. A Felmatide assists DNA repair response following UV radiation. So this is interesting in its applications, talking about that a Felmatide assists DNA repair after UV damage. And just the possibilities with this are endless for Clinuvel and a Felmatide. Now, this could be something that could be significant for Australians because we have probably the highest rate of skin cancer in the world. So this is about DNA repair due to UV damage from being the sun or something like that. So this is interesting and exciting for me. And it seems like it's interesting and exciting for the market. Because let's have a look at the chart. Is this a breakout? So I'm not calling Auric Mining a breakout because share price was in an uptrend, but this just confirms the uptrend for Auric. This share price of this company has been a downtrend. And it did look like share price wanted to form a bit of a consolidation base. I was waiting for it. Share price struggles to fall below $13. A really good buy or entry point would be about $13. But look at the one-day candlestick. A really good one-day candlestick. Really good one-day candlestick. A little bit of selling, but not a lot. And I'm not going to say this is a breakout just yet. We are at about a 6-month high. In fact, the last time share price was this high was back in December 2023. So we are at a 6-month high. And that is around the time period when we are looking at highs where I might say this is a potential breakout. Very important the next few trading days that we don't see selling. The reason we might see selling is all these shareholders who bought at higher prices in the past, who see the opportunity to sell some shares. And if there's not enough demand and there is an extra supply of shares on the market, that could lead to the share price dropping. We haven't seen massive volume coming in today. So a lot of this increase in share price is enthusiasm from the buyers, but a lack of enthusiasm from sellers. And if the enthusiasm from sellers actually increases, that's when we see a sell-off. So if we had a lot of enthusiasm from the sellers today, the share price probably wouldn't have moved all that much. So possibly some of the sellers are liking this announcement as well. Anyway, so I think the next few days are very important for Clinuvel. I'm not calling this a breakout just yet, but it's looking promising for the company. And it's a pretty good announcement in my opinion. So Auric, Stage 2 mining commenced on 10th of March 2024 with over 300,000 tons of ore to be mined in 2024. I should do a deeper dive into Auric. Okay, so let's have a look at some charts. And let's start with a fairly popular company. In fact, the number one pick for 2024 among viewers of this channel and also among many experts is a company called Aroa Biosurgey. Unfortunately, share price is in a downtrend. Now, possibly the downtrend is coming to an end. This company popped up on my 3-month high screener last night. So the share price yesterday got to a 3-month high. And when we say 3-month high, not a 6-month high, just a 3-month high. And the share price does look like it's possibly turning around. So put a little bit of a resistance area right there. It's broken through that little resistance area. It's not a very strong resistance, but it's there. And it's got above that level today. We've also seen a bit of buying coming in. So this could be a turnaround, but you could have said that back here, back in December. And you could have said it back here. There was a nice run in Aroa's Biosurgey share price back in late 2022, early 2023. So I'm not quite there calling this a breakout, because if you look at December 2023, share price on that particular day did get to a 3-month high. Yeah. So not necessarily calling this just yet a breakout, but it's promising for Aroa Biosurgey. Now, a few small cap companies. First one is Readcloud. I did a selling video on this company not that long ago. When I say not that long ago, I'm talking about Readcloud. I'm talking about May 15, 2024. So we're talking about 1.5 months ago. So May 17, 2024, I did a video on this company because the quarter report looked pretty good, but I was concerned a little bit about seasonality. So I'm pretty sure this company provides stuff for schools, something like that. And there's going to be seasonality when that happens. So 17th of May, and that was right here, right in there. There it is, 17th of May, right in there. At that point in time, the chart started to look pretty interesting. I was like, chart is starting to look interesting. And look what's happened to the share price. And look at the volume as well. So the volume's expanding. Share price is on a run. I would not buy this right now. Share price has risen way too quickly in the last 2 weeks. It's gone from about 7 cents, actually 6.5 cents to 11.5 cents. So it's almost doubled in the last 2 weeks. But the volume, I'd love to see a little bit of a pullback. Now, I was thinking maybe there was a pullback back here in late June, early July, but never happened. That's a good sign. You don't see a significant pullback. Share price went sideways a little bit. And we have seen this little bit of a gap open this morning. That's a negative sign as well. So I would expect a bit of a sell-off soon in Readcloud. And yeah, I expect that. I do expect that soonish. It may not happen, but I do expect it. And yeah, I wouldn't be trading this just yet, but the chart does look good. Does look good otherwise. Do expect a bit of a pullback. The other one was Titomic. And I am kicking myself a little bit here because I was almost going to buy this company at 7 cents. This little bit of a dip here. I actually did have on my buy radar, and I was like, oh, it's a really, really good support level right there. And it hit my buy price on the 27th of June. I went, no, I don't know. And look at the share price after that. Share price up 31.58% today, and it's gone above 10 cents on strength. So another little support level now for this company is right on 10 cents. So moving forward, if I see the share price of this company get to 10 cents, maybe I'll trade it. 10 cents is a very powerful natural support or resistance level for all companies. You can see 10 cents or Titomic had trouble getting above 10 cents. It tried on about 1, 2, 3, 5 days. And then today it's gone above 10 cents on strength. The reason I say strength, look at the volume, a very big volume coming in for this company. I don't think the company's released anything. No, the last announcement was the 1st of July. So that's Titomic, 2 small cap companies. Titomic has a market cap of, well, it's almost 100 million. In fact, it's going to be over $100 million now with the rise today. And let's have a look at another company that did feature on my ASX Today rundown video not that long ago. And that's Infinity Resources. A nice looking chart. So up 120% on the 1st of July. Share price then went sideways. Pretty sure this company did a capital raising as well. Share price did not drop. That's a good sign as well. And then up another 36% today. That's a beautiful looking chart for Infinity Resources. Let's have a look. What else? And EROAD. So this was a nice chart for EROAD. It's broken out on the 2nd of July, and we've just had a little bit of pullback. And the main thing is the volume has been light. That's what you want to see on a pullback, light volume. So there's no enthusiasm among the sellers. Yeah. The sellers are unenthused selling this company. And let's have a look at the trade history. You'll be able to see that today, only 31,000 shares traded. The last 4 days, over $100,000, including 2 days over 200,000, and on the 1st of July, over 400,000, almost 500,000 shares traded. Today, 31,000. So very light volume today on a pullback. That's exactly what you want to see for EROAD. I did put in a buy at $1 and well above $1 right now. So I did initially buy at 90 cents. I think it was here. It was right here, 90 cents. And I did put in, when it broke out on the 2nd of July, I did put in a sneaky buy at $1, expecting the share price to pull back and test $1 because, again, round number is a resistance level. Now, 2 other companies, actually, I was going to show you VBTC. I just want to see how long this has been trading for. Not long. And in fact, timing was terrible. The price of this ETF's gone from $20 down to $16.49. And the first trading was on the 20th of June. Okay. And 2 more companies' charts I want to show you before we end this particular video. Santos. Apparently there's rumors about a takeover for this company. And that's why we saw the share price increase by about 4% yesterday. And it got to a really important level. See this dashed line, which I've had in place for a long time. We've seen the share price of Santos struggle to get above that dashed line or that resistance line 1, 2, 3, 4, 5, 6, 7 times in the past. Yesterday, it got above that level and then pulled back. And today, it's just below that level again. So not quite a breakout for Santos. Plus, I don't like to trade companies when there's rumors. And the final chart of the day is CSL. I am trading this now. So I've got a longer term position in my colleague portfolio. I'm also trading this. And eventually, when I take my profits in that trade, I'll transfer my profits to my long-term portfolio. So that's the way I trade. I'm going to do this now. And that's how I'm going to add to my long-term position, is take the profits I make and just put it into my long-term portfolio. And this chart's looking pretty good. I like this chart. So Santos up, and I mean not Santos, CSL up another little bit today. And if the share price of CSL gets above, we'll go look at the weekly chart. So we're really looking for it to get above 320 and then 340. 340 would be significant, but because the share price has been going sideways for a while, eventually the share price of this company is going to move back into an uptrend. Potentially, this is it. Potentially, this is the start of the uptrend for CSL, just potentially at this point in time. Okay, so that's all I've got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.